And I know, okay, you talking about, okay, so I got a question in the chat and oh, it's a private message. Hold on. So you have a leverage question. You have a leverage question. So I'm gonna forward that question before we really even get started. I'm definitely, because it's a leverage question, I am definitely going to ask that you redirect that question to Dr. Bythewood, because that is the purpose of the call following this one. So we have a talk with the finance doctor. So I am going to ask that you redirect that. That's about international brokerage and the U.S. brokers and the type. So the question is, I'm going to read the question. So, because I think it's private. So Dr. Bythewood, it says, I know that international brokers. So Dr. Bythewood, while I'm getting this set up, Dr. Bythewood, you can chime in. Well, actually, I'm going to read it, but let me go ahead and get this recording started. So let me make sure this recording gets started. All right, so welcome to, this is BYOB Market Talk. So we actually have a question in the chat, and I'm gonna go ahead and read it. And Dr. Bythewood, while I get set up, I'm gonna go ahead and ask that you can go ahead and chime in, because I know we redirect to your call. That's the purpose of your call. But while I'm getting set up, I definitely want you to go ahead and chime in, because this is definitely a question for the finance doctor. That is why we have a finance doctor. So I want to give him the opportunity to answer that question.
Ms. Dyer, I do not see the question in the chat.
I'm going to read it because he sent it to me privately. So let me go ahead and read it for you. It says, I know that international brokers give you more leverage, like 1 to 500, and U.S. brokers only give 1 to 50. But I think I'm misunderstanding something from this equation. If the advice is to only trade 1 to 2% of your account, why do you need a leverage of 1 to 500, or am I confusing the concepts? Thanks. So.
Okay, thank you for that question, whoever asked it. So the way you want to look at it is, first, that we're talking about two separate things. We're talking about apples and oranges. The amount of leverage that you have is the apple. The percent of your account that you're putting at risk at any one time is an orange. So let's separate that out right away. So it's probably easier to start with the 1 to 2%. The 1 to 2% means this: based on the amount of money that you have in your account at any one time, each individual trade should only be 1 to 2% of the total. So if you have $100 in your account, then one individual trade should only be worth $2. That is a oversimplified example from the percent perspective. So what you're really doing is saying that based on your leverage and based on the amount that you have in your account, you want each of your trades to be a very small fraction of the overall account, so that if I am doing multiple trades over a period of time, no one trade will be able to put me in a position to wipe the account out, because the profit margin, or excuse me, the amount of it is so small. Now, put a period on the end of that. And now let's talk about the leverage. Now, the United States of America happens to be the cornerstone of the world economies. We also happen to have gone through something called the Great Depression, which was really great. And as a result of that, we put measures in place to ensure that our economy would be as stable as possible, because if we go down, all the other world economies are impacted. So there's a lot of regulation in America that isn't in other countries. Much more regulatory state. So one of those regulations happens to be that brokers can only allow 50 to 1. 50 to 1 means that now hear me, in any one trade, your ability to be able to maximize the return you're making is increased. So 1 to 50 means for every $1 that you're making on a trade, with a 1 to 50, it can be $50. Obviously, 1 to 200 means it can be 200. So your ability to grow your account and your ability to be able to maximize your return is going to increase the higher the leverage that's allowed by the broker. And notice that there's actually a third fruit. There's a banana, because the banana is the amount of leverage that you use on one trade. So first, the apple is how much of your total account are you risking in each individual trade. The orange is how much leverage does the broker allow you to use in terms of how much you'll be able to maximize beyond the amount of money that you have in your account. And then the third thing is how much leverage are you using on one trade. Now, these three situations together it's not enough to understand it fully. That's understandable, because these are things that we layer in our understanding by logging into the IM Academy and getting comfortable with all these concepts in addition to practicing in our demo account. But I think that distinction that I just made makes it easier for us to learn more about each of the three things. Quick recap. First, the amount that you risk in each individual trade as a reflection of the total account. Second, the amount of leverage that your broker allows you to have. And third, what is the amount of leverage that you use in each individual trade?
Thank you so much, Dr. Bythewood. Thank you. So that should clear your question up. That was a really, really good question. And okay, and once again, the answer is private, but he says, thank you so very much. He did have them all confused. So you gotta thank you so very much.
Okay, I tried not to say this, but I just have to. When I teach classes on ground, people sitting in the classroom, I put a statement up the first day that says you're not allowed to say the C word. The C word is confused, because confusion is an energy, when all you're really doing is asking for clarity. So think about it. You said the word confused twice. You said the word clarity 0 times. So if we change confusion to let me seek clarity, let me understand this better, it literally improves the learning curve. In the classroom setting that I'm referencing, when people say they're confused, it doesn't matter what I say, because it has to fight through the wall of confusion. So all I'm suggesting is, just like the power of I am a master trader, all my trades end in profit, we need to take the confused word out of our vocabulary and shift it to clarity.
I like that. I like that. So that's the power of the Talk with the Finance Doctor, the call that comes on immediately following this one. That is why you also want to participate in that call, because what you're learning on this call is you're learning the skill set, but there are so many things that also follow up behind the skill set, and you want to be able to apply. You want to understand the why behind the what. So that is why on Tuesday and Thursday evenings, this is Market Talks. This is Market Talks. This is a training call. But immediately following this call, you have the Talk with the Finance Doctor, your RX for Forex. So that's going to empower you. That's definitely going to empower you to where you can actually shift your mindset and make you a trader completely, you know, to where you actually can empower yourself to be a full-fledged trader, where you actually shift the paradigm mentally and in your trade accounts. It takes it all. You really have to do it all. So, and that's good. The same reason why you don't use the word problem. That's phenomenal. That's good. So where are we at this evening? Now, where are we at this evening? So this is, so tonight, just so everybody, we can definitely look at it. I thought that's what we were. But tonight is definitely a, I want to make sure. So I want to make sure that you all remain, you know, kind of keep your microphones muted so we can keep the integrity of the call. But one thing I definitely want to do is I want to be able to answer questions this evening. I want to go over the strategy. I know I got a question on GN this evening, but I want to go over the strategy. If this is your first time joining the call this evening, I definitely want to get a 111 in the chat. If you're still learning how to cash out, let me get a 222 in the chat. So let me get a 222 in the chat if this is your, if you're still learning how to cash out. So welcome back, everybody. And so this is the purpose of Market Talks is tonight, of course, if we see a trade, we take a trade. Tuesday nights is strictly training. Tonight is definitely a night where we'll take a trade if we see it. But, and of course, what a promise. So welcome to BYOB Market Talk. So we definitely want to make sure that you understand what you're doing, and we want to make sure you all understand, you know, the BYOB cash out, and you're very, very welcome. So this is what we're here for. So now, so what I've asked it, so today we trade, I'm gonna walk you guys through the BYOB cash out, and it kind of looks like, I know I got asked to pull up GN, so I'm gonna go over this real quick. Kind of look like it's a little consolidated. It definitely looked like it's a little consolidated. It kind of hit on, I'm definitely going to go back. I'm definitely going to go back over what the strategy is. So for those of you all who dropped that 111 and the 222 in the chat, don't feel like you're being left behind, because I'm going to go back over. But this is definitely, we had a very, very prosperous day today trading. So this is just some of those trades that people are still looking at. They kind of played out. So I have a feeling that, let me see, before, it's no such thing as I got a feeling. I'm gonna tell you why I got a feeling. It's a reason why it's there. So when you're looking at the stochastic on the hour, the stochastic is kind of curving and it's going up right here. And now let's look at the 4 hour. My 4 hour definitely, you see I was kind of slow. So you said, oh yes, it was a great day. You are very welcome. So my 4 hour definitely needs to kind of finish playing out right here. They kind of finish playing out, and let's look at what, see, we kind of got a little pullback on that new daily. So we kind of got an overall idea of what's been happening. Now, one thing I definitely want to keep in mind, there's a lot of things that's happening with Brexit, okay? I want you to keep in mind there's a lot that's happening with Brexit. Now, just know that it did get approved. It did get approved, and so they'll have that transition this year. So you're going to get some impact. So you're definitely going to get some impact with that. So GBP went positive on us for a little while today. So if we look at, let's go back to what we were looking at, because we were looking for that drop. We were definitely looking for that drop. Now, with that drop today, this is where I know I dropped in a chat and I put that message in there that it was buying, okay? It was buying. So we had definitely had that drop, but then, and it was doing what it was supposed to do, but then we had some positive news. So this is where the fundamentals impact the market. This is where the fundamentals definitely impact the market. And then of course it continued. This is where we say the market will go back and continue doing what it was doing. So this is where I dropped it in there that it was buying. So you definitely had the opportunity to grab the buy. So you had the opportunity to grab the buy, and then it pulled back down. So this actually went up for about 60 pips, right? It went up. So, and that's what it is. So now this is just one of the ones that happened today, and I wanted to be able to show you that. I wanted to be able to show you guys that from hold one. Sorry, my thing muted. I apologize. But I wanted to be able to show you this because this is what actually transpired today. And I know that we had a lot of people in this trade. And also, as we've been training, I've told you that GBP has a lot of profit in the market, but then it also, it gets a lot of pullback as well. But if you are trading from up here, you notice it never hit your stop loss. So the market pulled back with that positive news, but it also continued to where we were expecting it to go. So just kind of keep that in mind. So for those of you all who were not in the trade, you definitely had the opportunity to grab pips here. So you had the opportunity to sell, you had the opportunity to buy, and then you also had the opportunity to sell. So, all right. Now, this is definitely what we actually had the opportunity for today. Now, the question is, for clarity, when you started trying on BYOB, can you clarify? Do you only jump in a trade? I'm actually about to go over that, no, you don't get in on the 40s. So I'm actually about to go over it. I just wanted to definitely kind of cover and give a recap on some of the things that we actually went over today, because this was a great example of GBP. A lot of people like the GBP pairs because you can actually get a lot of profit on GBP. So you definitely can get a lot of profit on GBP, but at the same time, I definitely want you to understand that while you can get a lot of profit on it, GBP is that one that will give you a more pullback as well. And you have to be willing to ride that wave, right? The same thing we talk about with US 30 or gold or any of those, that if you're looking for that big profit, because that's what comes with those, you have to be able to ride the wave with a pullback. And this is just an example of that. This is an example of that pullback. Now, this was a news. However, you have to be able to ride that pullback. So you can't look for the profit and not expect a pullback. And I just wanted to show you that because this is what happened today. So just kind of keep that in mind. Now, let's talk about the BYOB cash out and what it is. So everybody's with me on that, because we get that a lot. We get that, do I stay in this trade? I got a 30, 40 pip pullback, or, do you see how far the US 30 pullback, or, yes, you're going to get pullback. So you have to be unemotional. You have to detach your emotions. And I know I dropped a training in the Telegram that we've done on being non-emotional, trading non-emotional. And so that's definitely been dropped in the Telegram chat. And so it's on the YouTube channel. So it's a training that we've done on training unemotional, because I want you all to understand, if I'm going big, I have to understand that big pullback. So you can't get emotional in a pullback when I get, if I want that big profit. So now, let's talk about the BYOB cash out. BYOB cash out, because we cashed out today. Now, how did we do that? So let's talk about it. So here we go. Notice that first things first, when I'm looking at the vibrato, you notice that they're going to give you potential trade ideas. I unchecked the 5 minute. So with this not being checked, you notice there's not a lot of momentum in the market right now. That could also possibly be because in the Asian market right now, let's talk technical analysis and fundamental analysis. What's happening in the Asian markets right now? There is a virus that's happening. There is a virus over there. So they have a lot of this definitely impacting their markets right now. So we're not really looking for too many trades this evening because there's probably not going to be a lot because in the Asian market, they have that. In addition, they have their holiday that is now here. You know, they have their holiday that's here, you know, and also, you say fires as well? Well, there's so, I mean, you got quite a few things that's happening. You got the holiday, you got the virus, you got the fact that it's Thursday evening, and what starts happening as we start cycling on Friday is markets start closing. So, right, you know, so, but this is their holiday, so they have quite a few days off, right? They probably got about a week off. I can't remember the dates, but they got about a week off over there on the Asian market. They take about a week off this time of the year, their holiday, their new year, so that's something to take into consideration right now, on top of the fact that you compound that with the virus. Now, the virus is also impacting our markets. We saw that with the US 30 yesterday. So kind of keep that in mind, because yes, we mark up charts for technical analysis, but fundamental analysis has a little play in there as well. So just kind of keep that in mind. Now, but let's talk technical, and this is what the BYOB cash out is. So let's talk that. So first thing first, we have the stochastic. My stochastic has the blue line that crosses over the red. Blue line that crosses over the red. Now, this is a leading indicator, okay? It's a leading indicator. It must go first, okay? It's a leading indicator. And yes, you notice that this starts from that 0 to the 100. That's how it runs. So with that being said, with this going from 0 to 100, I need a crossover around the 80. And to answer that question that was in the chat, yes, I need it to be around the 80. Keyword is around or around the 20, okay? I need it to be at that overbought or oversold position. So I definitely want it. So it's just like the momentum. So I'm needed to drop to the bottom and then come up and pull from the top. Now you notice, let's look at this one, for example. This one is at the 70s or so. Can it be there? That's close. That's why the keyword is around. But the higher, understand, the higher, the better, because it's more momentum, it's more force. Understand the stochastic is using closing prices and moving average, okay? So it's a leading indicator, but it's using closing price and moving average, and so that's what it's comprised of. That's what it's using, that's where it's moved from. So that's how this momentum is calculated. So if it's somewhere in the middle, now you understand with this. Now, just to kind of answer your question a little bit deeper, okay? When I look at this one actually started right here. If I look at my crosshairs, this one started up here. It started way up here. But then when I come down a little bit, I actually had a correction. So my momentum came down, but it had a correction. So to answer your question, yes, this is around the 50 and the 40, but it's coming off of a correction. So if I look up here where the candles are, this did start around the 80, close to the 80. That's why I say keyword is around. It started around the 80. Momentum pulled down. Look at the crosshair at the bottom. The momentum came down, but I also had a correction. And so it just started pulling back down. So you notice my PSAR never flipped. My PSAR is still there, but even had my PSAR flipped, because it touched it, but it never flipped. And also so just even with this touching, when we talk stop loss, when I get to stop loss, remember this is going to be very important when we talk PSAR and stop loss. So, but because you want your stop loss outside of the PSAR. So so when I'm looking at my stochastic, I don't want anybody feeling like, oh my goodness. So, because it had it flipped, this still would have been a good re-entry point. So if somebody had missed a trade, this still would have been a good re-entry point, because I'm looking at this is coming off a correction. So, because my momentum started here, okay? This is where my momentum started. You can kind of look at the full picture and see this is where your momentum started. So keyword around the 80. See, around the 80. I'm looking around the 20. I'm looking around the 20, around the 20, around the 80. That's where I'm looking for my momentum. Now, I need my red candle with a flat top. I definitely need my red candle with a flat top. I need my green candle with a flat bottom. So when I see that, I got my red candle with a flat top. I got my PSAR flip to the top. Let's also look at this buy, okay? Let's look at this buy, okay? When I look at this buy, I also see that I got a green candle with a flat bottom, and I also have a PSAR flip. I got a PSAR flip to the bottom. I need to have all three. I must have all three, okay? Now, notice that because this is when this gets started, notice that they're all not gonna be aligned up at the same time, okay? They're all not gonna be aligned. We just happened at this time, look, it looked like most of them are. I was trying to find one where it's not. But so my momentum started here. Honestly, my momentum started back here. This is one where it's not. So let me draw a line for you. I want to show you, okay? I think I had this question earlier as well. So notice that I had my momentum started here, okay? And then I got a little dip, and then it pulled back up. So once again, when it pulled back up, okay, now I got momentum kicking in again. I got momentum kicking in again. Okay, and the key is you're trying to make them all leading indicators. Do not allow that to throw you off. The stochastic is a leading indicator. The Hikinashi candles and the PSAR are lagging indicators. They will never all happen at the same time. So you will never take a trade if you want them all to happen at the same time. So imagine, okay, this is my analogy. I'm driving my car, okay? And if I'm driving my car, my stochastic is the person that's watching me, and I'm using my route. Remember, it's a moving average. Moving averages and closing prices is saying, this is me, this is you watching me, this is me, you know, based on the patterns that I typically take, based on how the market's been moving, based on how I normally drive, you're doing this and you figure that I'm gonna take that left turn up there, or I'm gonna take a right turn. You're making an assumption, right, that because I'm going the same pattern that I normally go based on what I've done in the past. So based on what I've done, based on what I'm doing, right? Based on what I'm doing, you're making an assumption that this is what I'm about to do next. So that's what a leading indicator is. It's making an assumption, right? And that's what that does. So now lagging says something has happened for me. Something has already happened, okay? Something has already happened. And so because something has already happened, something has already transpired to give me an indication that I'm about to do something. So my patterns tell you I'm about to make a left turn, but I haven't gotten a turning lane. I have not put my blinker on. I haven't done any of that. But the other two are lagging. That means that I've actually put a blinker on. I might not be in a turning lane, but I put my blinker on. So my Hikinashi candles tell me that I got in the turning lane, or I put my blinker on. Now, because I put my blinker on, you can make the assumption that I'm gonna make a left turn. So the trend is showing me that I'm gonna make a left turn. That's my blinker. Then the PSARs say I actually got in the turning lane. That's the reversal. It's saying something transpired in the market. So they're not gonna happen at the same time. So they're definitely not gonna happen at the same time. So these are lagging and this is leading. So don't let it throw you off. So, but you cannot get in the market just based on an assumption, because the stochastic is the assumption. Okay, you can't get in the market just based on the assumption. I need to also turn on my blinker and get in the turning lane. And the reason why this one doesn't matter which one comes first is because have you ever, oh, you're very welcome. Have you ever seen somebody that don't cut their blinker on? Or have you ever, before they get in the turning lane, and have you ever seen that other person that gets in the turning lane and then cut their blinker on? Or, you know, so most of the time people cut their blinker on, then get in the turning lane. So most of the time you'll get your Hikadashi candle, then your PSAR, right? But every now and then you get that person that gets in the turning lane first, you get a PSAR, then they cut their blinker on, right? So you can get them out of order, but it doesn't matter because they're both lagging. So that's what that is. So now, this is where we are. So I actually have my, so now you see, it dipped again, you see, so they made the assumption was too early, made the assumption was too early, made the assumption right here, it kind of dipped again, and so now this is where it actually got ready. So you see this dip wasn't as deep, but this is where it actually got ready. So now this is where you actually can come take the trade. So this is where everything aligned, okay? This is where everything aligned. So you see how long it took for this one to play out? So they made the assumption, but this is when it actually happened. So that's why I was saying don't try, you know, this is when it actually happened. So this one is where this one happened, and this is where this one happened. So now you actually have we got 3 trades that we're looking at for the BYOB cash out. This is the foundation of the strategy. That's the foundation of the BYOB cash out, okay? That is the foundation of the strategy. Now, what's next is understanding that I need time frame confluence. And then I want to give you guys the opportunity to ask some questions because I want to make sure we're there. So I want to drop down to my 5-minute chart. Now understand this. I want you guys to understand this. I can't take the trade before I have before everything is aligned. Understand, I cannot take the trade before everything is aligned. I cannot take the trade before it's aligned. I'm trading off of the 15-minute chart. So if we're going to stay with the car analogy, this is my car. This is the car that I'm in. My 15-minute chart is the car that I'm driving. So all my analysis, everything that I'm doing, my stochastic, my candle, my flat top, my PSAR, everything that I need is in the car that I'm driving. I'm in a 15-minute car, okay? So then I drop down to my 5-minute chart. And when I drop down to the 5-minute chart, I need to make sure that this is the car that's in front of me. So the 5-minute chart happens before the 15. Remember, these charts, they flow together. So, but this one goes before me. So I can't go anywhere if this one's not going in the same direction because that's in front of me. So the 5-minute needs to still be selling. This one needs to be selling. This one needs to be buying. It is. So I know that we're in alignment. Then I go to the hour, okay? I go to the hour. And when I go to the hour, okay, when I gotta find my arrows again, when I go to the hour, when I get to the hour, now this is what I call the swing of the market. This is what I call the swing of the market. When I check the swing of the market, this also needs to be doing what I needed, the same direction. So this is the one behind me. So we're caravanning, right? We're all going we're going to the same place. So we all need to be going together. So this one needs to, now remember, because it's the one behind me, they'll all look different. I have no expectation for it to be doing exactly what I'm doing. So this one needs to be in a sale. I'm looking for a sale. So that one needs to be lining up and looking like I'll put it on my watch list, looking like it's gearing up for a sale, right? And then this one needs to be looking like a sale as well, like it's gearing up for a sale. In this situation, we actually get, I mean, this one actually lined up pretty good. This one is pretty decent as well, right? So these two actually lined up pretty decent, okay? Now, and also, let's look at this, where we got the notification first, but it didn't. So the swing in the market, it was still green. We couldn't have went anyway if it would have lined up, because it was supposed to be a sell, right? We really wouldn't have been able to go anywhere anyway right there. And so now when we come to this buy that we're supposed to be in, it's a little pullback, but are we gonna buy? Can we buy right there? Now, the answer under normal circumstances would be no. It would be no. It would be no. Now, the exception to the rule is a GBP pair. And the only reason there is an exception to the rule with GBP is because it has so much liquidity and volatility in the market. Liquidity and volatility is a good thing. So the only exception to the rule is GBP. If this was any other currency pair, your answer would absolutely be no, we would not take this trade, right? So because it's GBP, now look how much currency it went for. That's 66 pips. Do you understand why it's an exception to the rule? Okay, that's 66 pips. Now, let's look at something else. Hold on, I want something other than GBP. It's all our markups from earlier. I want USD CAD, okay? USD CAD, the same markup. Or just the same, just a few candles. I just want to show you something, just a few candles. Look at the pips on that. That's 6 pips. It's not 66, it's 6. So you understand the difference in why GBP is the only exception to the rule, okay? GBP is the only exception to the rule. The only exception, that's 66 pips. So you can get 66 pips in a correction in GBP. That's why it's the only exception to the rule. So what are we gonna do? We're gonna check the 30-minute, okay? We're gonna check the 30-minute, and when we look at that hour, the hour, if this was a solid red candle, no, absolutely not. But this is look at how this is a nice little doji. It's an obvious pullback. Now remember, we would not have any of this. We wouldn't have any of this. So I'm trying to make it bigger. We wouldn't have any of this. This is what you'd be looking at. You'd be looking at that doji candle. So I'm sitting there looking at that doji candle. I'm sitting there looking at that pullback like that. So I'm sitting there looking at that pullback, and I know it's a GBP pair. I'm going to check the 30-minute candle. And on that 30-minute candle, look at how solid that green candle is. See, that's what I would be seeing. Okay, that's what I would be seeing. So remember, it feeds into the hour. The 15 feeds the 30, which feeds the hour. So what I know is it just hasn't had enough time to feed it. The only exception to the rule is GBP. Okay, if you don't want to do, if you cannot remember that, then there's no exceptions to the rule, because I don't want you applying an exception to any other currency pair and then come back and say, well, you know, well, Tasha said, or Ms. Dyer said, or I don't want you coming back saying that at all, because the only exception to the rule is GBP. That's it. So with that being said, now that's the swing of the swing of the market. Now, to understand the trend of the market, I would need, because remember, we're doing 10 pips and cash out. GBP, you can do more than 10 pips. You understand support and resistance lines? Trade it to the support and resistance line. Well, I just showed you 66 pips. So you understand support and resistance. I want to understand support and resistance because I want 66 pips. Okay? I want to maximize my pip opportunity. So you want to understand support and resistance, because other than that, you're doing 10 pips and cash out, because how do you know where to stop your pip count at? But also, you want to understand what is the trend, what's the current swing, what is the current trend of the market? Like, what is the current, if this is what happened, the swing of the market and the trend of the market, I would need to look at my hour and my 4 hour. So obviously my swing of the market is in a sell, but my trend of the market was not. So obviously this one is changing into a sell on my 4 hour, and it had changed here, but it had not changed. So you would not be looking for a long-term trade until you got into these 4 hour candles. Okay, you would not be looking for a long-term trade. You see it beginning a trade looking at my stochastic, but you wouldn't be looking for a long-term trade until you got there. So I just want to open it up tonight. You know, we're not going to take any trades, or just explain to you why we're not going to really find any trades tonight with the Asian market, the virus, everything else that happened. So questions, you know, we got some time for questions and kind of some things like that. So you have some, drop it in the chat. Definitely want to do that. I know we cashed out on oil earlier, so and it's like GBP just stopped moving. So I thought we were going to be able to take some GBP pairs, but they just stopped moving completely. But they should buy. Honestly, I think they should buy. But I'm not going to say that right now. I'm going to wait. I don't want you putting in a buy anything. No market, no buy, market, no buy by market, no buy limit, no buy stop, no buy nothing. Because this didn't even finish. This didn't even finish. So, questions. This is the time. You see what the market's doing for us right now. So tonight is the night to ask your questions and make sure you have complete understanding. Are there certain pairs that trade better during certain times of the day? I would not. It's what you really want to understand is you want to understand the time that there's volume in the market. So in the currency pairs that have the most volume. So I mean, even right now, you know, if so for example, even if I'm trading period, like no matter what, during the morning, during the London session, in the morning, that's just the most, like even when you look on here, I was trying to see if I could go back. But even if you look on here, okay, I just saw, let me pause it. It's got a pause button. So you notice that it says warning, high volatility session London. So that means it has high volatility. So that means it has the most volatility, most movement in the market. That's when a lot of volatility happens. So that's when the most movement is happening. So that's going to be the time of the day. If you're going to, depending on where you are, that's going to be the time of the day where you're going to get, so no matter what you're trading. So also, for example, if you're trading CHF, I don't care what time of the day it is, make sure everything lines up, because there's no liquidity in that currency pair. So there's absolutely no liquidity at all. So you want to make sure that everything lines up so you can make sure you get your pips out of there. So now the next one is, I'm new to your strategy. I noticed that your chain goes off quite often. No, I'm not sending out the cha-ching. So let me kind of explain to you how the cha-chings work. I'm gonna put the 5 minute back on here. So I'm gonna explain you how this works. Let me explain you how the vibrato works. So let's just say I'm gonna change this out from the GBP pair. I just clicked this and I thought that, so I'm gonna just grab this. So what happens is, and I'm gonna actually have to go to the home page because you won't see it. I'm gonna just go to the home page first. And so for those of you all that don't know, this is the front page to the vibrata. So you actually have Mr. Rogers, who is the visionary behind the BYOB movement. This is him and his testimony. This is a 1-minute clip talking about you having the opportunity to be your own bank. So this is Mr. Rogers on this clip. So when you log into the vibrato, that's him right there. So, but I came onto the first page because I wanted to show you something. So yes, you have these different strategies here. So that cha-ching, no matter what, you know, that you have to pick a strategy, because I wanted you to be able to understand that when you come in here and you pick the BYOB cash out, you got all these different strategies in here, but you come in here and you pick the BYOB cash out. I want you to understand how the vibrato works, because this is not specific to a strategy, because when you understand the market. Now we come in here, I actually got the 5 minutes selected now. So I'm gonna unselect it because we're gonna stick with what I just picked. So when I click this, okay, now understand that what the vibrato does is it send out frequencies. So when you're learning how to, and this is help you understand why the BYOB cash out is so accurate as well. Because when you're learning price action, when you're learning trading, you're actually, there are things called those entry triggers. So those entry triggers happen at support and resistance lines. And so they're made up of moving averages, they're made up of trends, and they're made up at the support and resistance lines. So what is this strategy? It uses, in the stochastic, it has moving average. It also has trend Hikinashi candles or trend candles. And then the PSAR is the PSAR is at support and resistance that moves with it. So that's why the strategy is in the 90-something percentile on accuracy. It's at 92% accuracy when we back tested it before you even got to add in time frame, confluence, or anything else. So now I'm just going to drop this on here just to kind of show you, and I'm use the call price that they called it at. So 1.10533. Okay. Now, what do you notice? You notice that this dropped on a support and resistance line. So what this did is this a potential sale, and it's called at price 1.10533. So what that did is identify, you notice now, that's sitting at a support and resistance line, okay? Everything happens at support and resistance. Why do I stress for you to learn support and resistance? Everything happens at support and resistance. So we're on a 4-hour chart, and you are actually looking at an entry trigger. So now, once you identify an entry trigger, so whether I'm on a trend, whether I'm sitting at I don't care what you're on, this is an entry trigger. And my stochastic is still kind of pointing down. So my stochastic was still kind of pointed down. Now, what I'm looking at is this entry trigger is triggered at, and they called it at UTC time at 2:00. So this is actually when they called it right here. So underneath here, there is something that happened. Now you see what happened. Look at the Japanese candles that's happening underneath here. So there is something that's happening right here that's happening with this entry trigger. So I just kind of want to point that out and help you understand that. And so we notice we're looking at the Hikinashi candles because my Hikinashi candles are like the translators. These are trend candles. And so you notice that they're not pushing through there. But this is where we kind of identify what's happening. We identify a pattern. We identify, what's going on. And we have to determine, do we take the trade? We don't blindly take this trade, but you apply the strategy you're using and you determine, based on that entry trigger, do I take it? So at every trend, at every support and resistance line, no matter what, no matter how you're trading, whether it's on a trend, if I'm on a trend, even if you notice when you're at a trend, you notice when you get those pullback and those corrections, they're at support and resistance lines. So when you got your mark it up. When you got your higher highs and your lower lows, they're at support and resistance lines. So just go through and look at it. All of that's happened at support and resistance lines. Even if I look here where you're actually looking at a double top, right? Where is this at? It's at support and resistance lines. And what is that? That's nothing more than another entry trigger. It's nothing more. If I look to the left, it's all happening. It's always stopping at the, so this would have triggered something at the vibrato. This would have triggered something on the vibrato. This would have triggered something. So all of these would have triggered something, but it's all sitting at a support and resistance line. And so this just triggers something. Now you have to look at it and say, is this, it's an entry trigger, but is it a valid trade? Now the beauty behind it is you don't have to keep scanning the market. So it sends it out, but you just don't have to keep scanning the market looking for it. And that's the beauty behind you being able to do that. And now now you can actually say, okay, my stochastic is beginning to give me a look. It's still pointing down. So what's happening on my hour? What's happening on my hour is, oh, my PSAR is starting to get that curve. You know, it's paused here. It's not pushing through there. So I don't have to try to figure out what my Japanese candles are telling me. My Hikinashi candles are telling me it's stuck at the support line. It's not pushing through. My stochastic is telling me, look, my Hikinashi candles are not moving. My PSAR is saying, look, it's about to come grab it and pick it up because look at the curve in the PSAR, okay? What's my 15-minute telling me? Oh, it's riding the support line. Why is it riding? It's even going through its cycle. Why? So when it's 4 hour finished riding, I'm more than likely I have a buy. More than likely I have a buy. Not a potential sell. That's why I told you it doesn't matter what this says. I probably have a buy set up. So let me go back up here and get the next question. Hopefully that made sense and answer your question. To be clear, time frame confluence is for example of the 15 in the hour trending in the same direction. Right. So that's why I say kind of imagine that car, right? I got a 555. Great. So 555 means that you understand. So for those of you all that are new with us. So if I go back and I'm in that car and we're in that caravan, that 5 minute, so if I'm in the car I'm in is my 15-minute, the 5 minute chart is the car in front of me. So the car in front of me has to be doing what I needed to do, right? The car in front of me has to be doing what I needed to do. The car behind me, right? The car in front of me is in front of me. So I can't go till it goes. So it's going to be lined up the same way I am because I can't go if it's not going. But the one behind me, right? He might not be able to get into the turning lane because he might be a few cars behind me, but he needs to come with me in order for me to make sure I have a valid trade. So we're caravanning, you know, he needs to come with me. You got to think about it like that. So if I'm making a left turn, he need to be making a left turn. If I'm going right, he need to be going right. So if I'm selling, he need to be selling. If I'm buying, he need to be buying. But he might not have a valid setup yet. He just need to look like he's coming with me. He need to look like he's getting over into my lane. He need to look like he's right behind me. Whatever it is, they're all going to be different because if the same way as you're driving, think about real life, right? Where is he at behind me? Because every time you're driving, is it always the same? The person that's following you, he might have got stuck at the light behind you. You know, kind of think about real life. So it's never gonna, you know, this is the charts, the market. It's never gonna be always the same. Do I set alarms on TradingView? No, I don't. No. I know a lot of people always talk about alarms. I really never do. I barely set my alarm clock, honestly. So after meeting the 3 conditions and the candle still have wicks, does that matter? The candle has to have a flat top and a flat bottom in order to have a valid trade. That's very important. Flat top, because remember, this is a translator. If it has a wick on it, that means there's something else going on underneath it. So it has to have a flat top and a flat bottom. So that when it's explained with that flat top and that flat bottom, that's very, very important. Is 92% accuracy, 92% accuracy. That was back tested for a year off of the strategy. And yes, one of the tools that we used was definitely the vibrato. Time frame confluence, if you're trading on the hour, then of course you want to drop down the time frame and you want to use a factor of what's called 4 to 6, a factor of 4 to 6. So if I'm on an hour, well, no matter what time frame I'm trading on, I want to use a factor of 4 to 6. So that means I multiply by 4 or 5 or 6 and get the time frame that I want to trade on. So for you, the hour time frame, then your time frame Confluence would be on the 4 hour. So you would check the 4 hour. And of course, for your trend of the market, that's your swing of the market, your trend of the market. The next one would be the daily. Bloomberg. How can Mr. Rogers determine a US 30? Bloomberg. What do we tell you? Bloomberg. Cut off the news. I cannot stress it enough. Cut off the news. What you feed yourself is what you know. The same way I'm telling you to stay tuned to hear what Dr. B has to talk about. You need to take a completely different shift in your mindset. So cut off the news and listen to the financial news. You really, really, really need to shift your mind into a financial news mindset. You need to feed yourself financially. So you cannot listen to, those people are there to get a check. That's really, so you cannot, so, and I'm gonna go there. So I'm gonna go ahead, Mr. Rogers.
Yeah, I just wanted to add to that. For those of you, asked a question, literally what Ms. Dyer has been sharing with you tonight is understanding the road signs. The road signs are going to tell you how they go and which direction to go. And as you become more in tune to understanding market structure, market patterns, just think about, as she was just alluding this evening, your daily travel habits. Sometimes, between certain hours, that route to work is going to have intense traffic. That's no different than the market. And there are going to be some times where you'll be able to put that blinker on and you'll be able to get over 2 lanes. And there are going to be some times where you have your blinker on and you're trying to, do proper road management, and then someone will not allow you to get over it even though they see your blinker. It's the same thing with the market. So that's kind of the concept. You put your blinker on and someone won't let you get over. That's when the fundamental, misskew your technical analysis because something maybe tweeted, said, or in the market, but it's always going to adjust itself back on the traditional pattern. And if you look at it from that perspective, understanding that, what drives the market, emotions, people who are making decisions are emotionally involved. And when you are able to remove your emotions out of it, then you're going to always make the best entry and exit points. I guarantee you, if you're on this call tonight, when you get to a place where you trade without any emotions, no matter what the market is doing, up or down, when it has those pullbacks, the reason why you have an angst is because you're emotionally involved. And if you trust the process, knowing that it's going to correct itself, impulse correction, continuation, if you're in the right direction, then that's when you will really maximize your earning potential from that perspective. If that made any sense to anybody, I need 5 in the chat. If that made any sense to what I was saying, put a 5 in the chat. So as we begin to transition tonight, if you've got tremendous value out of the information that was disseminated by our trade whisperer, our very own Ms. Dyer, I need you to put a 333 in the chat. I want to make sure you're alive and well. 333 in the chat. Excellent. So folks, once again, I'm just excited about the opportunity that many of us